Hi, welcome to this video today, which is on the 18th of October. We're on Sunday. We're just going to be taking a look at what we consider to be a really good risk-reward trading opportunity in the markets, which is shorting the Australian dollar. We're going to look at the AUD against the USD, the JPY, the GBP and the CAD. We'll go over to the charts in just a moment. I did a video just over a week ago on the Aussie dollar, and I said I felt it was just about ready to break down. Now, it has shown some weakness. I now think that we are on the verge of a big trend reversal. Risk to reward on Aussie dollar shorts looks really good to us. I'm going to go through all the logic behind my thinking. We're going to go to the charts right now. But just before we do so, please do keep in mind, it's my view as of this specific moment in time. It can, of course, change in line with market action and conditions if you want all our trading techniques and also our daily analysis from a sentiment and technical perspective of 14 FX pairs. All you need to do, click on the link beneath this video and you can get live access to our member centre. You can also follow our Facebook page and join our Facebook group of traders if you wish. Right, now the first trade setup we're going to look at is going to be AUDUSD. Right, just before we go to the Aussie dollar, US dollar daily chart, I'm just looking at the weekly chart to see the really big levels of support and resistance. Okay, I'm going to draw my levels of exact entry, stop and target in a moment. There's two levels that stand out for me. This level here, which is the 70 level. Okay, now what you have is a nice downtrend in the Aussie, and then just before the big fall we test the 70 level, down we go, come up, look at that big blue, hits the level, can't get through, red tail pokes through but can't clear it. These two candles poking at the level, can't do it. Then we creep up and eventually we break the 70 level. Okay, up we go. Big red smashes into the 70 level. Two blues come off. They can't reach the top or the body, top of the body here. I see this decisive candle. And now we roll over to the downside. Okay, so from our perspective, there's a trajectory, and there is the big level, which is 73. So the way we see it is, yeah, the fundamental backdrop is not getting better for the Aussie. This rally here is basically on the idea that we're going to get a V-shaped global recovery. That isn't going to happen in our view. So our view is there's a good opportunity to get short of the Aussie through the 70 level. If we rally back to 73, you can sell it up there, bank into the 70, sell the other side. I think the 70 level will give way. And just to correct the Aussie dollar's overbought condition, this is that big risk off, yeah? I think we should go to 65. If we get big risk off, we could easily overshoot the level. But the minute I'm looking at 65, so we can sell on a rally, sell on a break lower. And I think, yeah, if you look at the fundamental backdrop, it's not getting better for the Aussie. It's going to get worse going forward, which points to a big move down in the Aussie. Right, let's go look at the daily chart, look at the fundamentals and sentiment, draw our levels of entry, stop. Right, AUDUSD daily chart. In terms of the technicals, do them in a moment. You already know the big levels that I'm looking at, but just want to throw in how to manage the stop, which is obviously very important, how to play the trade, do the technicals in a moment. But in terms of the Aussie having limited upside, a lot of downside, fundamentals and sentiment, they're not getting better for Australia. I think it just can get worse from here. Now, we've said, obviously, the Aussie dollar rallied on that idea of a V-shaped global recovery, which has powered commodity prices higher. So you've got iron ore, top performing metal this year, up over 50%. Copper's been on a tear as well, many commodities, but they're full of speculators. Okay, it's not to do with the supply and demand situation at all. It's to do with seeing a V-shaped recovery, which we don't think is going to happen. So we think the commodity complex, if you look at charts of iron ore and copper, for example, you see topping action. We think commodities are going down. That will pressure the Aussie. Also, you've got friction between Australia and China. Obviously, Australia, a major trading partner, is China. That's where most of their commodities go. And China isn't happy with Australia at all. And that's coming into play with coal. There was a rumour a week ago that yeah, Chinese authorities are telling Chinese customers, yeah, just don't buy Australian coal at the moment. And BHP is reported as having confirmed that Chinese customers have been asked for deferrals of their coal orders. So basically saying, yeah, China is doing this. And coal is obviously another major export of Australia, so that's not good news, okay? Aussie dollar has also been supported by a hawkish RBA, the central bank, but now they've turned dovish. At their last meeting, they didn't cut interest rates, but they pointed to a rate cut coming. Okay, so rates to fall probably to 0.1%, they're 0.25% at the moment. That erodes the yield that the Aussie dollar's got. I know it's not big yield, but that yield erosion obviously will weigh on the Aussie dollar. And they're going to have to increase stimulus. You know, any bank that increases stimulus, that's bearish for the currency. So I think, the RBA, a bearish fundamental, which will weigh on the Aussie dollar. Then you've had Aussie dollar's obviously been supported by risk on firm stock markets. They've been incredibly firm, okay? And now they're discounting a Joe Biden win in the US elections. And that's seen as bullish for the Aussie. Why? Because Biden is supposed to be more user-friendly to China. That's better for risk on. He's going to do a big fiscal package as well. Market's discounting a Biden win, but did this in a video the other day where I was looking at the US elections. You can look it up. Biden win is not a clear-cut eventuality in our view at all. Yeah, Trump has a chance of winning. Forget the polls. The polls were wrong in 2016. They could be wrong again. Now, even if Trump doesn't win, okay, it's going to be a close election result in our view. You get a close election result, the loser will dispute the election result. Both sides have said this. That would leave the US without effective government while the Supreme Court and lawyers sort it out. That is really bad news for risk on, and that's bad news for the Aussie dollar. Now, at the moment, the market's a little bit blasé about this Biden victory, but I think as you come closer to the election, it's only a few weeks away now, I think the market will become more cautious, which will weigh on the Aussie. Okay. Now, in terms of another factor, speculators are buying the Aussie dollar as smart money commercials sell. Now, in terms of it's not an extreme, this is on the COT net traders positions, but in this big rally here, the commercials were heavily, heavily long. When we get up here, the commercials start to sell, specs buy, and you can see we have worked our way lower. I think, the commercials are right to be selling the Aussie. It's not getting any better. Now, a move to risk off could see fat tail move. What's a fat tail move? A fat tail move is a really exaggerated move, more than 2 standard deviations from a mean price. Now, Bollinger Bands, which I've got on my chart here, will show you this. Okay, here's the mean price, the green line, 2 outer bands, 2 standard deviations, and you'll see that the price really just gets the outer Bollinger Bands, comes back. The outer Bollinger Bands really kind of hold price. Okay, get a few little pokes through. When you get fat tail means more than 2 standard deviations, so really exaggerated volatility, which we saw when the Aussie really melted down, that blow off low. I think that could happen again. Okay. In terms of the Aussie dollar, no, I'm not looking for a huge sell-off as such in the stock market. Even without a huge sell-off, we're going to 65. If we do get really big risk off, we'll go even lower. Okay. Now, in terms of the chart, you see the commercials were selling into this level here. Come down, down, back up, and then down again. This is kind of a half-hearted rally for us. So here we go. There is the level, which is in line roughly with the 73 level we just saw on the weekly chart. Let me get my line straight. Okay, so if it goes up to 73, you could sell, use a stop of 74.50. Okay, so sell up to there, then it comes back towards 70, you bank out and then look to go the other side. Okay, what about if we don't rally? 70 we know is a big level of support. It's a round number. Double bottom there, up. Like I said, it's a half-hearted rally. We're rolling over. This level gives way. Then you could sell, but your stop could be behind that level there, okay? So you're going to use, obviously, a closer stop. 65. This is the level we've already looked at. That is without big risk on, in our view, or big risk off, I should say. Sorry, mine's now straight. Okay, so if we come through here, it's a nice looking trade because only risking it to there, yeah? So that's your risk, that's your reward. What about if we do get big risk off? And I think you get that certainly on a close election result in a contested election where you could see fat tail, and that would target the 60 level. Okay, so this level maybe could be targeted if we get a fat tail, but certainly 65. I think it looks a decent trade. You know, obviously she rallies up, you can sell her, and then really focus on that 70 level. Yeah, big institutions, be massive order flow around the level. It gives way, a long way to go to the downside. Now, in terms of AUDUSD, we think it looks a good risk to reward trade, but so do some other Aussie dollar pairs as well. So let's go and take a look at some prices. Right, we're on AUDJPY. Just going to use the charts from our member center for the last few pairs. We've already said, obviously we're extremely bearish of the Aussie dollar. What about the Japanese yen? Well, just in brief, Japanese yen for us is oversold, not just against the Aussie dollar, but against a basket of currency. So we expect some Japanese yen strength. If we get big risk off, the yen will move the strongest, or be the strongest currency, be even stronger than the USD. And we're not looking for big risk off, but it could come. Okay, so personally, I think this is a really good looking trade. I like the chart action in it because we get new highs here, then you get this nice fall. Now you get kind of triple bottom into the 74 level here, round number. You rally back, but this is quite a laboured rally. And that double top there meets resistance. These two candles here, they were previous support. They're proving to be, or proved to be, resistance here. And then we kind of come to the downside. Now, in terms of this one, let me just show you on a clean chart how you might want to play it, if you're bearish, of course. 74 level, you can see my cursor here on these three candles, go through 73.80. So really just below the low there. You can use quite a tight stop coming in fresh, okay? You could come in and use a stop of like 75.50, okay? Now, if we rally up, watch for this level here to hold. So if we rally up, just take it on weakness on the way down. And then you can see if the 74 level gives way. So you can sell it if it moves higher or on a break lower, okay? Target 67.50, I believe we can easily get to that level longer term. So the risk reward on this trade is about 5 to 1. Obviously, our view has to be correct, but we like this pair a lot. Okay, next pair, and GBP pairs have been pretty volatile. And what I quite like about this pair, we're already in this one. We've taken it off this 180 level. Okay, and we've moved up to just above the 182 level. This 180 level is really a solid level of support in our view. Now, in terms of you coming to this one fresh, if it dropped down towards the 180 level, you can just key off the level on strength. If it doesn't drop down, this tail high, go through the tail high here, and then watch for follow through. If you go through the tail high, you've got nice blue, the stop can be behind this candle here. Now, in terms of the GBP, a lot of people are saying about what if there's no trade deal done between the EU and the UK, sterling will drop hard. Our view is a trade deal will be done. Both sides need a deal. And when you had Boris Johnson saying he's prepared to walk away, not talk to the EU anymore at the back end of last week, sterling did not fall. It's blue, okay, up on the last couple of days, yeah. And incidentally, in terms of no trade deal between the EU and the UK, that big fall there, we featured it in the video, saying at the time, market has overreacted. Sterling will go up. And sterling, did go up off the support level here, the double bottom, and we took the trade, and obviously we come back in now. So I don't see a no trade deal between the EU and the UK. Okay, so not too worried about that one in terms of this pair. I think pound is oversold. Pound is going up. I like pound pairs generally because they're volatile, okay, which is exactly what you want. You're going to get a result in your favour quickly, or you're going to get stopped out. Hoping we get a result in our favour in terms of this one, of course. Now, right, let's move over to our last pair we're looking at today, AUDCAD, and I think this one has confirmed a downtrend. And just in terms of the chart action, new daily highs here, down, back to test, down, back to test, down. Then we try and come back up again. But this 20-day moving average mid-Bollinger Band just holds the rally. And we reference, obviously, the 20-day mid-Bollinger Band all the time. We'll use it as a level of resistance if we're bearish, and support if we're bullish, okay? And, mid-Bollinger has held. We're off to the downside. I think it's a sell. If we open weaker, we're at 93.30. We went below 93 or get below 93, that is a sell. Stop can be back behind this 20-day moving average in a double trend line. Resistance, we're already in this one. Our stop is a bit further back at 95.40. But if we get a little bit more weakness, I'll bring that stop tight behind the double trend line, okay? It's a decent risk reward trade. Obviously, my target has got to come to fruition, which is 88. It's quite an ambitious target, but I do feel that going forward, the CAD is just going to be the strongest of the commodity currencies. So it's a buy on the New Zealand dollar as well. There is a level in between, which is 90. Obviously, play the trade as it goes, so to speak. But even if we get to 90, it's a decent risk-to-reward trade, or good risk-to-reward trade. Down to 88, be great trade. See if we get there. But I'm liking the look of the price action. I think it's confirmed a downtrend. Any rallies back towards this 20-day moving average can be sold. If it does rally back to that level, stick your stop behind this level here. Then you'd wait for it to break down through the 93 level to bring the stop down behind the double trend line. If that makes sense, hopefully it does. So there we go. 4 AUD trades. Looking forward, I don't see things getting better for Australia. I think they're going to get worse, and that means the Aussie dollar going down. So I think risk tilted to the downside. You may see the Aussie chop around a bit or move sideways or have a little bit of a rally in the short term. The big picture points to weakness in our view, of course. Right, that is the video for today. Thank you for watching it. Take care. Have a good day.